All right, well, the Vancouver Resource Investment Conference is billed as the Super Bowl of resource investing. We are speaking today with the president and CEO of VRIC Media. He is also the host of the Jay Martin Show. I am thrilled to be back with him. He's my longtime friend, and obviously we have a lot of common interests, especially gold and mining stocks and whatnot. So Jay, always good to be back with you. Welcome back.
It's so good to be here, Daniela. So looking forward to chatting with you. I'm a big fan of your show, always have been. So it's always fun when we get to sit down.
And feelings mutual, my friend, feelings mutual. And so excited and happy for all your success. But listen, I have a lot of questions for you about what the themes and what you're looking at as you're planning VRIC 2026. But this is the first time. And how long have we known each other, Jay? 20 years now, probably?
Yeah, it's getting on 20. It's getting on,
So
getting on 20.
how do you feel about this gold market that we are living after, all the looks and feels of gold we've gone through? How do you feel right now about this market?
Yeah, it's funny, right? Just looking at a gold chart right now, it's almost like you're looking at fantasy, given the false starts, the extended bear market, everything that gold investors have lived through. But it's for investors that have only been in the sector for 2 and 3 years. They're also there, right? They went through a couple of years of pain just to get here. So you don't have to be, 10 years deep in the sector. But yeah, it's a couple of things, right? And one thing I've noticed, and you've probably seen this too, is that gold investors who have been in the precious metal sector for, like I said, 3+ years, that's it. They have so much PTSD from how hard the bear market years were that they forgot what a bull market feels like. And as soon as they hear any mainstream personalities start talking about gold, they immediately assume, oh, this must be the top, because the generalist investors are now talking about our sector. This must be the top. It's time for a big correction or a pullback. And, there will be corrections along the way, but it's so almost comical that it's been so long since gold has been favorable that gold investors forgot that's actually what a hot market feels like. It's when generalist investors do begin to turn their head to your sector. And the gold market's different, right? Like a lot of generalist investors that I talk to are watching gold's rally, and they chalk it up to just like the next asset rally. Maybe they watched real estate, they watched crypto, they watched AI, and now they're like, oh, gold is the next asset to rally, and that's what this is. But obviously, gold is different in that good news for gold investors is bad news for pretty much everybody else, right? That's sort of like, it's the smoke signal, and it's emblematic of the shifting geopolitical landscape that we're moving into, right? We're moving from an era of certainty and into an era of uncertainty. And, we can obviously unpack that. But for anybody invested in the gold sector, specifically the equities, I would say, when the market hands you a gift like this, and there's a bit of froth in the equity prices, just make sure you're taking care of yourself, which means take profits, right? Never be scared to take profits. Take a bit of risk off the table, especially if you're in any sort of earlier stage opportunities, and just reallocate that cash to something more secure. If you look at any of the best investors in the gold sector who have been around 20, 30, 40 years, many of them are probably not much better buyers than anybody else, but they're much better sellers. They're quick to take profits when the market hands them a gift. And so, that's one thing I'm doing in this precious metals market is de-risking from anything that's, on the sort of medium risk to high risk side, and just reallocating that capital to a longer term bet.
What's a longer term bet for you? Is that a pure physical gold play, Jay, for example?
So I think we have, 5-10 years of a gold market in front of us. There are certain companies that I'm comfortable parking capital in for that duration of time, knowing that inside 2 years, inside 5 years of a secular bull market, there's going to be periods of terrifying volatility. But the companies I'm comfortable parking capital in through that volatility are the cash flowing, the Agnico Eagles, the Newmonts, the Wheaton Precious Metals, these companies, right? They're managed well, great quarterly earnings. They're profitable. If gold drops $1,000, it's still a good business. And I'm comfortable riding out the long-term trend in a vehicle like that. But a lot
Mm-hmm.
of my viewers and probably yours also invest in the speculative side, right? Now, these are companies that don't have cash flow. They're not really businesses yet. They're companies that you invest in, and you're waiting on a catalyst that may shift the share price, right, favorably, right? Well, one of those catalysts just arrived. That's market sentiment. And so share prices are up, and I'm in a handful of, WhatsApp investing groups and trading groups, and I'm watching people celebrate 300, 400, 500% gains on a speculation, and they're not selling because they have some price in their mind they're waiting for. And it's like, no, this is the time to take that principle off the table, right? You can wait out a secular bull market with the volatility in a healthy business that has great quarterly earnings and pays a dividend like an Agnico or a Wheaton, but you can't just set it and forget it in the speculative market. You got to pay attention to those catalysts, take the opportunity to de-risk when it's served up to you, which it is right now. And so that's how I differentiate between those two. One I'm comfortable parking for the long-term secular bull, the other you just have to be a little bit more on top of.
Jay, let me ask you, I mean, what do you think? We talk so much about the central bank buying, and that's what fueled this gold price run up. But uh, for you, was it primarily central banks, or do you think there was more behind this rally?
I think that's a good seed to look at, right? And it's a good place to come back to when we inevitably will see a big correction in the gold price, because that buying happened for primarily two reasons. You could dissect it and get more complex, but to keep it simple,
Yeah,
central banks started buying because of two main assumptions, right? The first assumption was that the US government was going to continue to devalue the US dollar. So if you still believe that to be true, then gold's still a good bet. And the second assumption was that United States geopolitical strategy was going to be less certain than it used to be, right? Confiscation of treasuries, all of this. So as long as those two assumptions are still in play, the gold thesis is still in play. And that's why it's valuable to look back at the central bank buying as your primary catalyst. It is that is the big shipping money, right? The slow to move, slow to pivot capital. That's the central bank treasuries. And everything after that, right, follows this gold market has been the most textbook market anybody could expect, in that it started with central banks buying the physical
right.
asset and the physical asset appreciating. And then over 6 months, 9 months, some of the best-in-class royalty companies started appreciating. And then 6 months later, the best-in-class miners. And now it's like the funded developers and some earlier stage stuff is getting some love, but it's been, 3 years of slow, methodical, patient capital trickle. And investors are always impatient, and they're like, but when are the junior equity is going to catch a bid and all of this? And honestly, that gives me anxiety just to think about, because it shouldn't be easy to make money. It should be hard. But the slow approach that this gold market has rolled out is so textbook and gives me a lot of conviction in the longer term trend.
We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Click below or visit DannyReport.com to download it now so you can move forward with clarity and confidence. Now back to the show. I want to ask you, you wrote a great article that the steroid economy has arrived, the American awakening. Talk to me about your thesis here, Jay.
This is the reindustrialization concept that everybody's talking about right now. And so the article that I wrote was effectively comparing how China built their manufacturing might, right, through a process of state capitalism. And people often think about China as a communist country today, and it's not, right? It's not in the true sense. It hasn't been since Chairman Mao, died in 1973, and Deng Xiaoping took over and said, it doesn't matter if it's a black cat or a white cat, as long as that cat catches mice, we like the cat, which is to say, we shouldn't worry about whether it's a socialist policy or a capitalist policy, as long as it gets results, right? And this is when China's economy started dipping a little bit into capitalism, but retaining some socialism attributes, right? And this state-supported capitalism is how China developed their country into a series of specialized economic zones that became the most effective manufacturing bases at reduced cost that the world has ever seen. And in this way, it became indispensable to the entire global economy. Every major economy and every major technology company completely is dependent on China as a consequence of this 30-year manufacturing development that was state-sponsored. It cost a lot of money, but the result has been beneficial for the Chinese economy. The United States today has woken up and realized how dependent they are on China for so many things. And this is familiar territory. The rare earths are the most recent headline.
Yes.
But effectively, in this new era of uncertainty, as we talked about earlier, the U.S. is worried about this, and they need to regain control of, key industries, key supply chains, and key materials. And the private market won't do it as quickly as it needs to be done in the eyes of the administration. And so what we're seeing is state intervention. We're seeing the China playbook enter the West. We're seeing the marriage of state partnership with private enterprise. And, the 10% equity deal in Intel, the 15% equity deal in MP Materials. The United States government is now the largest shareholder of MP Materials, 5% in Lithium Americas, 10% in Trilogy Metals. The United States government has become the newest investor at the table in the raw material sector. And this is new in the West, and it makes us uncomfortable because as a small business entrepreneur, a free market guy, I don't want the government in my business.
Right.
But the government doesn't care what I think, and they're going to do what they do. And they're doing this. This is the future. I firmly believe that we're going to see more state intervention in private business in the West because, from a competition standpoint, if you were to break down the global economy and look at countries as corporations, the China corporation has been leveraging this strategy and it's worked very effectively. And now the United States corporation is going to try and replicate. The question is it going to work, right? Can the
Right.
U.S. actually reshore to the extent that they want to? And the part of this conversation that almost nobody is talking about is the
Right.
cost. The cost of reshoring these major industries and reindustrializing the United States. I mean, China did this over the last 30 years, and it cost them trillions of dollars. The United States is now going to attempt a version of that, but in today's dollar terms. We're not talking about hundreds of billions of dollars invested in manufacturing over the next 10 years. We're talking tens of trillions. And the inflationary impact of reshoring these industries is going to be a phenomenon that we've never seen before, especially if they try to do it quickly, right? And this is a major part of the conversation that's missing, but there's no two ways about it. And keep in mind, when China industrialized, the whole world wanted them to do it, right? Everybody signed that contract. We wanted the advanced technology. We wanted the EVs, the TVs, the smartphones, the laptops, but we didn't want that very specific part of the supply chain, the dirty part, the refining of the
Yep.
minerals. So China raised their hand and said, we will take that on. We will cede environmental considerations. We will leverage our cheap labor so you can have your cheap iPhones. And everybody signed that contract. And we may not like that contract today, but it was signed decades ago. But the world wanted China to industrialize so that we could globalize efficiently and have access to cheap goods. Nobody wants the US to industrialize because all that does is heat up the trade war, increase the era of uncertainty in the supply of goods and services, right? It's not good for economies outside of the United States, right? Now, they're still going to do it, and they should because it's in America's best interest, but it's not in anybody else's best interest, right? I mean, everyone else is primarily concerned about one thing, and that's their people's safety and their people's prosperity. This BHP deal that happened at the end of September, when everybody was talking about rare earth elements and these restrictions, the headline that far fewer people were talking about was China made a different announcement that same week. And it wasn't about rare earths, it was about US dollars. They went to BHP, one of the world's largest commodity traders and supply companies based out of Australia, and they halted future orders of iron ore in US dollars. They didn't halt future orders, just orders in US dollar terms. And China orders about $75 billion worth of iron ore from BHP every year. So it's a big order, and this brought BHP to the negotiating table. Where they landed was that BHP conceded to sell iron ore to China in the future at 70% in US dollars and 30% in renminbi. And so China got a big concession. They're now able to transact with a major multinational commodity corp in renminbi. And this kind of chips away at the dollar's hegemony, right? And, we can talk about why, but my point is that this was a big deal for China because they got a non-BRICS nation, a G7 adjacent country, to agree to transact in renminbi if required. It was a big headline for America because it's another, chip away on the margins at US dollar trade. But for the rest of the world, this stuff doesn't matter so much. It
Right.
doesn't matter to Botswana, Peru, Indonesia. All they care about, they don't care how China pays for iron ore. They don't care what's in BHP's treasury. They don't care about the US dollar hegemony. What they care about is whether or not cheap Chinese steel, which is what the iron ore is for, continues to arrive. When China halted orders, it's like, we don't care what happens here. As long as we still get what we need, which is cheap Chinese steel, you guys do whatever you have to do, right? Concede currency here or there, it doesn't matter. And that's just to say that there was the time when it was beneficial for everybody for China to industrialize, but it's not beneficial for everybody for the US to industrialize. So they're doing this at a massively devalued currency, massively increased cost, with a headwind, not a tailwind. It's going to be a big fight. It's going to be a big
Wow.
fight, but it's one I believe they're going to pursue.
I want to talk a little bit about VRIC now coming up in January 2026. I mean, it's going to be insane for you, Jay. I mean, with the current, with the prices we've seen in gold and silver, I expect you to have another, a sold out show here. But I guess I'd like to understand a little bit about how you build out the agenda and what themes you're going to focus on, and how do you pick? I mean, between BRICS, de-dollarization, like I said, the all-time highs in gold and silver, AI energy crunch, the rare earths. I mean, how are you going to put this all together? What do you choose?
Yeah, it's a great question. And it's the most fun part of the process, is determining what the content's going to be and what the angles are. I mean, our core purpose, Daniela, comes down to, that show is designed to help commodity investors, raw material investors, and mining investors cut through the noise and get to what the real opportunities are. And one of the biggest themes this year will be what we just talked about. It's that intervention of state activity in our industry. All the deals that we referenced, right? Trilogy Metals, US Antimony, Lithium Americas, MP Materials, those are mining companies. And there's a new player at the table with very deep pockets. And not just deep pockets, but the ability to manipulate policy. I mean, the Trilogy Metals deal was interesting, $35 million into a critical metals company in Alaska, Vancouver-based business, by the way. But the check size was one thing. The more significant
Yep.
development was right after, when they, coordinated the Land Bureau and all state actors to approve the multi-billion-dollar Ambler Road, which was the bottleneck for this. It was getting access to Trilogy Metals property, which was the barrier. But this new state actor doesn't just come with deep pockets. They come with the ability to shift policy. And again, we may find this distasteful as free market investors, but it doesn't matter how we feel. This is what's happening. And it's actually very bullish for commodity investors, because we've lived through 15 years of our industry being demonized and vilified and,
Yep.
and taxed to death and regulated out of operation. And
Yep.
that's what's changed now. Now the state is actually on the side of mining investors. And the unlock that's going to occur as a consequence of this is the bull market that
But
you
wait,
are.
you're talking Canada, or you're talking Canada or US, Jay?
I'm talking both. I'm talking both, and any
Okay.
key US allies. I mean, as mentioned, Trilogy Metals, the project is in Alaska. It's a Vancouver-based company. It's a Canadian business, but the material is valuable to the US. Any projects that are strategically valuable to the United States from a jurisdiction standpoint. So think about like US and allies and adjacent allies. These are the projects that may find favor with the administration in the US, their policies to greenlight permitting, move through regulation faster, and get this product to market, because that's the race right now. It's like these two regional hegemons, US and China, and all their proxies are racing to secure the supply of the materials that they're not willing to share anymore. And so if you can find the projects that are favorable to the US administration, you can bank on policy moving to your favor. And that's something that commodity investors haven't experienced for about 15 years. US, Canada, Australia, and beyond, right? Many Latin American countries.
I think what's interesting about your showing, having attended it for so many years, is it also gets quite political. I mean, you've had former Prime Minister Harper there. You've had the late Rex Murphy there, political columnist. You've had, Lord Conrad Black there. And I always find, at least in terms of Canadian politics, you get a better sense of what Canadians want. Like, you see the side of Canada or hear from a certain sector of Canadians that we normally don't hear from on the CBC or national television, Jay.
Mm-hmm. Yeah.
And that's definitely one thing I personally look forward to, is it kind of gives a voice to the other side of politics that we never really hear from.
Yeah, well, it's definitely part of the mission. We're working on Mark Carney right now, trying to get him out.
Wow.
So you have to wait and
Could you
see on that.
imagine?
Yeah, I mean,
Okay.
it's honestly, it's in his best interest to be at an event like
Yes,
this.
I
He's
would
trying
think
to
so.
to the country that he's the guy who's going to
Yep.
return Canada back to our resource economy.
Yes.
I mean, Canada came through the the 2008 GFC with a healthier balance sheet than any other G7 nation because the country was managed properly. It's a very simple country. Canada is second largest country in the world with a population smaller than California and very resource rich. So wealth per capita has the potential to be the greatest in the world if managed properly. And by that, I mean, we have one core industry, which is natural resource. And if that is functioning highly, it can fund all kinds of ancillary industries throughout the Canadian economy. But if you demonize the pillar industry, nothing else gets
Right.
funded. And that's what we've experienced
That
for the last 12 years.
that is so beautifully said, and sounds like, why can't we just do that? That just makes so much sense. Final note, obviously I mentioned you're also the host of the Jay Martin Show, a very popular show. I know you've had many mentors in your life, Jay, but now you've become a mentor to many, I want to say, young men watching. I mean, you document how you stay fit mentally, obviously physically. You've not only grown an incredible business, you have a beautiful family, right? You have, can I share, 3 boys, another baby on the way?
Yeah, yeah.
Breaking the news here. I mean, you're living the dream. You are winning, right? Was that the blueprint you set out for yourself? How did you get to this spot? Was it intentional?
That's a very kind thing of you to say, Daniela. So thank you. And yeah, we're about to welcome our first daughter, which is incredibly exciting. I've been so blessed to have amazing mentors in my life, and I've held on to them very tightly. And, there's such tremendous utility in having a social circle that you're very close to that is 5, 10 years further down the path of life than you are. And, I've got one crew, for example, it's a crew of entrepreneurs. There's 7 of us, all founders of, 7 or 8 figure businesses, very successful individuals, but, their life's messy, right? All of our lives are messy in certain compartments at some time, right? And we've met every month for the last 13 years. We travel, we do an annual retreat every year, but, this sort of like tribe of mentors is been such a valuable, just like learning through other people's experience, right? And helping you carve out the life that you want. I married right, Daniela, that's for sure.
Yep, you did.
Got
You
one big
really did.
You're right. Made a lot of mistakes, but I got that one right. And my wife's lovely. I mean, I really appreciate that. As you know, I'm sure there's mess behind the scenes, but you just keep fighting, keep swinging, keep moving forward. And what's this quote, right? Entrepreneurship, investing, life isn't a game of best man wins. It's a game of last man standing, right? And that's
Yeah,
what it comes down to is,
yeah, but you're
still
right.
get that swinging.
You're right. The most important decision is your life partner. That's what they say, and you definitely hit the jackpot there. So, so congratulations to you and Gretchen. And I look forward to attending the Vancouver Resource Investing Conference. And man, you have a lot of work ahead of you. I'm so
We're just
it's a
getting in the thick
daunting
of it.
task. Yeah,
Yeah.
like to put on a conference of that size, and how many people do you expect?
I think we should see around 9,000 this year would be my expectation.
Woo!
It's
Um,
Vancouver trends with the gold price, right? And so we haven't seen
Yeah,
this.
I got to get in this question because I was talking to someone, they knew you were coming on, and they're like, please ask Jay this because you've hosted, I don't know how many CEOs on your shows. Um, any insights as number one red flag in a pitch deck that screams pump and dump?
Oh boy. That job gets a lot harder now in a hot market. The volume of deals that are not worth a look goes way up, and it actually becomes a lot harder to spot the red flags in a hot market because the promotion always looks great. You're maybe feeling a bit smart because on paper you're up, you're a bit
Right.
wealthier than you used to be.
Yeah.
And so that's like the far more important question today than it was 3 years ago. I mean, the goal should be to get to the no with any opportunity that lands on your desk. The goal should always be, how quickly can I get to a no? Because there's a new bus every 15 minutes and 95% of the industry, uh, you know, shouldn't really be looked at with sincerity, right? It's a very high risk sector. I host a monthly mastermind with a variety of investors in the sector. Last month we had Adrian Day and Lobo Tigre, right, on
Hmm.
the mastermind at about 50 investors as part of our commodity university. And students are encouraged to bring deals forward and get the panel's thoughts, right? And myself and Lobo and Adrian kind of shared our perspective on whatever deals they brought forward. And if we looked at 20 deals that night, I think maybe 2 of them got a yes from everybody. But the point is, like, people were bringing deals that, Eric Sprott is a shareholder of, and Lobo said no. Rick Rule is a shareholder of, and Adrian said no, et cetera, right? It's impossible to know with certainty that you're looking at something good. But, your goal should be to look to, reduce your focus to as few number of companies as possible. And my biggest litmus test, Daniela, is like who's
Yeah.
involved, where you got to play to your strengths. Like, Brent Cook's a geologist. He's going to vet based on the rocks. I run a conference, a podcast, a media business. I'm in the people business, and I know the people in this industry. So my decision making when I'm looking at something
Yeah.
new is almost 100% determined by who else is involved, who seed
Exactly.
funded this project, who are the strategic advisors, and have I invested with them in the past. I tend to stick with the same crews again and again and again and again. And one tip I would just throw in front of the audience is there's a lot of shops in the junior mining sector that operate like incubators, right? And, the best in class, I would say, is
Yeah.
Fiore Capital, right? A good friend of yours, Frank Schuster, is the chairman of Fiore Capital, and there's maybe 10 companies under that umbrella right now. But the reason I say to look that direction towards the incubators is because those 10 CEOs in the Fiore group, every month, they get to borrow each other's brain capital. They get to bring their biggest problems to the boardroom and share and gather experiences from everybody else. Back to that peer-to-peer learning, they solve their problems by outsourcing brain capital to 9 other CEOs and their teams. And not just that, but they get to access each other's capital networks, bringing the cost of capital down. Like, there's tremendous value in that workshopping of business building.
Absolutely.
It's junior mining, so if there's 10 incubator shops, 8 of them should be dodged, right? But Fiore is a great one. Inventa
Yeah.
Capital is another one. Craig Perry, the founder there, who's knocked it out of the park a couple times for shareholders in the past, and now they're obviously Vizsla Silver, Vizsla Copper. But I tend to stick with those crews that I've made money with in the past and put on the blinders to a
Stick
very
to your
large degree.
cruise. But I
Yeah,
guess you're right. We are lucky in the sense that we get to know so many people personally, and so whose intentions are pure. Jay Martin, so good catching up with you, my friend.
yeah, so good, Daniela. I'm pumped you're
Yep.
coming to Vancouver in
Yep.
January. It's going to be
Yep.
a ton of fun.
We will
I'm
see
excited to
you.
have you on stage.
Awesome. Good to be back. We'll see you there. We'll speak again, my friend. Good luck with all the work. And thank you all for watching. And as always, reach out to my wonderful colleagues over at ITM Trading if you're thinking, or maybe you're already in the midst of planning precious metals as part of your portfolio and you need more advice, guidance, education. There's a Calendly link in the description below. And of course, subscribe to our YouTube channel. It keeps us going. We'll see you soon.